Get to the broader market and talk about some technicals, not fundamentals in this case. Joining us now, Stephen Suttmeier, BofA Securities Chief Equity Technical Strategist. Can you just, in a nutshell, tell us what happened in the last month since that VIX hit over 50?
Right, yeah, so that was a VIX spike. And every once in a while we get one of those that typically indicates some sort of panic in the market. And had a 90% down day, big washout breath day. Got a rally. Initially, it looked like it was going to roll over and retest, and all of a sudden it got really powerful, broke through resistances with confirmation from market breadth. Had three 80% up days on the NYSE. So 80% up days when 80% of stocks are up, 80% up volume, indicating a strong rally. Also took the advanced decline lines to new highs. So the market is actually in a fairly strong position here, technically speaking, given what has transpired.
What's happening this week? Last week was the big week, one of the best weeks we've had in a while.
Right.
Not much going on this week.
Yes, we are struggling with the 5,600, which is an area of resistance that we formed in July when we hit that level. It was also a target for us entering the year. So I think going forward, we are ending the best 3-month period of the election year from June through August. And typically that period is up about 7.3%. And so far right now, we're up about 6.5%. So there's not much upside based on seasonality. Then we should pause a little bit. In an ideal world, it's just a pause ahead of the election where people get a little bit nervous about election outcomes. Maybe the S&P backs off 55, 53, maybe a little bit lower. But the good news is, though, this corrective phase, this spike held rising 200-day moving averages across the indices, rising 40-week moving averages, depending upon whether you look at the daily or weekly charts.
And it could coincide with the Fed finally cutting, but it wouldn't be surprising to see, stocks have been rallying ahead of a Fed easing cycle.
Right. When
it finally comes, you've already got most of the gains. If we do see that a pullback to 55, 54, 53, it could bottom in October. All these things, we've seen this movie before. It might not be identical, but it almost seems like a sequel.
Yeah, I mean, we got ourselves, the lifeblood of a bull market, which is rotation. The first half of the year, Mag 7, Q3, pretty much most of the sectors outperforming, which is good. So I think that sets up the market for the next rally. So if we stabilize, struggle with the highs, maybe go a little bit higher, and then down a bit, what that would set up is a technical formation called a cup and handle. So, investors do not get as bearish as they did in early August based on price action in September, October. And then typically what happens after the election, you tend to get a nice rally into year end. And that could take the market towards that 6,000 area sometime. Yeah, I mean,
even though it's not your objective for the year.
I mean, it's a possibility.
Yeah, okay.
It's a possibility, but more likely, if you look at big VIX spikes, for instance, a year after these big VIX spikes, you tend to rally about 14%.
Really?
That would put you around 6,000 by the summer of next year.
Okay.
And if you look at median returns, it would be about 6,300, believe it or not.
Wow.
Could it happen earlier than that, just given the way the market's moving?
Okay.
It's possible.